Having grown with the bull run from way back in 2017, it's always best to hodl on during the consolidation periods. As I'm aware, this is the time of the bull season where long-term investors start to sell their bags while chasing pumps. Those who are patient and disciplined enough to hodl on through the consolidation period are those who would reap gains when XRP eventually adds a lot more zeros to its end. We have got a record-breaking NFT sale as CryptoPunk number 9998 was sold for a whopping $532 million, making it the most expensive NFT ever sold. As big players exit the market in what some crypto enthusiasts such as Crypto Whale regarded as money laundering, we saw a similar surge in NFTs in April as well, right before the big crash. Meanwhile, XRP and Ripple just recently had a conference intervention regarding the ongoing lawsuit. During the New York University Stern Crypto Conference held in September, former SEC Commissioner Robert Jackson had mentioned that during his tenure at the SEC, the U.S. financial regulators did not develop a rule that defines what a crypto asset entails. The NFT market just became more enjoyable as Fortune 500 companies are delving into the non-fungible token market at full throttle. Twitter is looking to implement NFTs into its platform. Coinbase is building an NFT marketplace. Facebook with the Metaverse Mania, as the Facebook Metaverse is set to support the cryptoverse through NFTs. GameStop is building its NFT marketplace as well. Nike is working on NFT verification of the authenticity of shoes. Warner Brothers is looking to release its music NFTs. We're seeing a shift to the digital age at a rapid pace, all thanks to the mass adoption of NFTs. And now we have what is regarded as the biggest NFT sale of a single artwork, the CryptoPunk number 9998, and it sold for $532 million. It's like the entire world has lost its mind, with the previous most expensive NFT priced at $69 million. The sale of CryptoPunk is almost 8 times greater than the previous record. We have some updates on the Ripple versus SEC case, as former SEC high-ranking official Robert Jackson stated that up until the expiration of his time at the SEC, which spanned from 2018 to 2020, the Commission had not defined a clear-cut regulatory framework for regulating crypto assets. Robert Jackson proposes that had the SEC approached the crypto regulatory structures from the Procedural Act approach, the Commission would have had a general setting of an ex-ante rule which wasn't suitable at the time, while adding that the SEC's approach to the APA rulemaking is the right approach as it involves rulemaking. Moreover, it benefits from spectators' input across the entire crypto space, including investors and issuers alike. An assertion that contradicts the current SEC chair's viewpoint on crypto regulation. Gary Gensler believes that the crypto market has clarity, even though he had earlier requested that the U.S. Congress provide a clear-cut regulatory framework for the emerging asset class. Similarly, Rostin Benham, the Commodity Futures Trading Commission chief, in a challenge to the SEC and Gary Gensler, has hinted that his agency should oversee crypto, as he affirmed that 60% of these digital assets are commodities, hence they fall under the jurisdiction of the CFTC and not the SEC. The big question here is, when would we get to that point in the cryptocurrency's maturity where the SEC can speak on providing a clearly defined regulatory structure? Most importantly, if you hold any of these digital assets, you're expected to understand the legal concept of fair notice and due process in the context of the SEC, engaging in such activities deemed as regulation by enforcement. Should the SEC prevail in this lawsuit against XRP, it will surely put every digital asset in legal jeopardy. Even though Gary Gensler affirms that regulation by enforcement is one of the most fundamental pillars in achieving the SEC's mission, just as the SEC's chair indicates that the agency's modus operandi aligns with the facts and the law, wherever that extends to, regarding having investors' interests at heart. Gary Gensler in his might went forth to mention that without examination against and enforcement of our rules and laws, we can't instill the trust necessary for our markets to thrive. However, the SEC and Gary Gensler's inconsistencies and failure to provide a regulatory structure for the asset class continues to be welcomed by the increased criticism from all retail investors and the U.S. Congress. As the over 30,000 XRP supporters led by attorney John Deaton and his crypto law firm continue to argue that if the agency's actions are on par with facts and law, wherever they may lead, then the points on the financial regulator's unstable idea of what crypto law translates into the crypto space, with the SEC repeatedly insisting that it has provided clarity to investors on precisely how it determines whether a digital asset is a security, therefore subject to its regulation or not. However, it's nearly universal among digital asset investors and blockchain project developers that the SEC provides no clarity whatsoever, and its public statements and actions have only generated market confusion. In turn, this has led to what many have called regulation by enforcement. XRP is gaining more traction through its expansive outreach and partnerships as the Ripple asset keeps opening the floodgates. It continues to lay down pathways around the globe to take over the world. In addition to the Flare Network partnership, XRP can be used throughout Ethereum's DeFi ecosystem, benefiting XRP's adoption and expansion. Currently, XRP is looking good as it's conveniently maintained the above 1 mark, flipping its month-long resistance level into support. Right now, XRP is well positioned at the 7th spot across the board. Additionally, XRP continues to register some slight bullish momentum with a more than 3% increase over the last 7 days, with an overall market capitalization for the digital asset valued at $55 billion at the time of recording. Adding to Ripple's extensive network of financial institutions, banks, and non-banks, the launch of an initial public offering could further see the price of the Ripple coin hitting more extraordinary highs once the lawsuit settles. Although a handful of crypto analysts are of the idea that the successful launch of an IPO may depend on the ongoing legal dispute between the United States SEC and Ripple. Yet the Ripple CEO and its other top partners, such as the CEO of SBI Group, have mentioned with 100% assurance that Ripple will be joining Coinbase and launching an IPO. A decision that was made in a bid to reassure investors that, irrespective of the crypto firm's ongoing lawsuit with the SEC, the fintech startup is on the right track, as it's not about to back down for a reason, and not even the SEC lawsuit can stop them. We've got this tweet from XRP Crypto Wolf back in July. XRP was the top performing cryptocurrency in the world Q2. So with this and going through the top comments on that tweet, we all could not wait to see what happens to this digital asset by Q4 through to the start of 2022. Because historically, every time there has been a bull run within the Q4 of the year, it takes off with a crazy momentum and usually happens in grand style. So will that be the case this time? I don't know. We need to wait and find out. Looking at the chart provisioned by the crypto aggregating platform CoinDesk and posted by this renowned XRP supporter, we could see XRP topping the chart amongst all of these other altcoins, including Ethereum, XLM, ADA, and even Bitcoin. At this juncture, XRP's longevity is guaranteed, irrespective of whatever hardship the SEC serves the Ripple coin, as expert analysts continue to predict XRP to be bigger than Bitcoin when the switch is finally flipped. Thus, even though currently Bitcoin is a lot more expensive than XRP by a long shot, XRP stands a better chance to usurp Bitcoin than every other cryptocurrency across the board.